And welcome traders to another installment of the Polaris Trading Group weekly review and preview video for June 5th through June 9th. In affiliation with Infinity Futures, we'd like to welcome you. And before we get to the charts, industry regulations require that we highlight NFA Compliance Rule 2-29. Simply states that hypothetical performance results have many inherent limitations. Trading in futures and derivatives on futures is speculative in nature and involves substantial risk of loss. This particular video is for educational purposes only, and there is no recommendation to buy or sell securities. Past performance is not indicative of future results. All right, so with it, let's take a quick look at where we are in our S&P. Alright, so the next slide you should see here is a chart of the my work chart that we've been working with over the past several weeks now with these videos of the profile. And I've just basically condensed this a little bit to give us a better viewpoint and advantage point of the bigger picture. And again, this is a work chart that I use in our trading room, and we highlight key levels as they unfold, and we basically keep those levels there until they're violated and reversed on. So as you can clearly see, the market's been, in a roaring uptrend. I mean, it's, when I say roaring, it's been very kind of slow and quiet and deliberate, but there has not been any significant pullback. All right, and the market has been touching up against that big 2400 level for a number of sessions. All right, up until about last week, and then we popped above there. And again, last week's video highlighted the 2416 level up here as a point and figure target. All right, and then we also highlighted again 2396 as a key support number. All right, so coming into this week, all right, those were our numbers to look at for whether the market was going to reverse and needed to reverse back below down that 2396. And a breakout above the 16 level, conversion above that, would lead to higher prices. So that's basically where we left off last week. Quick review there. All right, the 2381 way down here. This is the last FOMC meeting at the L, what we consider the L. So obviously clearly above that. So during this past week, the market was kind of toying with breaking out through that 2416 level. We held the breakout point of the 2400s, and then not really much of a test back down at the 2396s, but we did test the actually the breakout point. It was around 2404.06 area, and it set up what we call a spring. So a spring basically is a push down to test a prior point. No breakage of that level sets up a spring type condition, all right, to move higher. Once price broke above that 2316.17 area, all right, then it was moved to the upside. Of course, that's what happened this past week. So now, what I want to point out in this chart, and some of you may or may not understand this or know this, but the market tends to move in what are called measured moves. And so one thing that you want to do is take a look at where a key support or resistance level currently is or was, and project upside prices. In this case, we're talking about the upside breakout, so this applies as well to downside breakdowns. But we would take the key support level here at 96, and then the high up here, I believe this was about 18.25 if I'm not mistaken. All right, up at that max high there on this candle. And so the 96 is up to the 18s and change. And then you project that level from the breakout of that high. Okay, so everybody followed me here. So the breakout of this high right here, okay, you would then measure the distance between the support and that level, and then a breakout of that level. So that's this way up here, okay? So when we have those measurements, and by the way, we can project these in advance. So this is not after the fact, but this is an in advance type of thing. So you just say key support, key high, the range between the two, and then project it upwards. And that brings us to about the 2440s, around the 2440.50s, I believe. So very, very close. And that's where the market seems to, at this point, Sunday evening, June 4th, topped out this past Friday. Now, this does not say that this is going to be a stop and reverse and the market's going to come back down, but it is a measured move. And since the market moves in measured moves, we can at least make an initial inference that the market may start running into a little bit of resistance here. But again, bulls have been in control pretty strongly. Now, another level that we have highlighted recently in the past was the 2444s. So on the point and figure chart, and we'll show you that in a minute, 2416s was the initial target. The upper target there became 2444. So let me bring that chart in and we'll give you a quick view of that. Okay, so on your slides you should see the point and figure chart that we've been using the past couple weeks. Again, 2416, 21 up here. You'll notice that was the initial target breakout. And then the next level here is a point and figure target of 2444.17. So we're only about 4 handles plus or minus away from there. Pretty close. And then there's some upper targets here ranging between the 48s. You can see 55, 67. So keep those numbers in mind. All right, over the next week, if there's still continued strength to the upside, all right, we could potentially see any of those numbers come into play. All right, the next slide is our relative rotation graph. All right, this gives us an idea of where kind of the sectors and key groups have been moving. And for those of you that have been with us over the past few weeks now, we've been talking about, of course, NASDAQ, no question, been the leader. Utilities, we saw as a little bit of a cautionary sign there that it's been in the leading group as well. But really what's starting to be of interest to us are the small caps and the Russell, mid caps, and the transportation index. All right, now although they're in the lagging quadrant here in the bottom left, you can clearly see they're making moves to the upside. Again, this is a week over viewpoint, so they're definitely making moves to the upside. So pay close attention to that transportation group. So as the Dow Jones moves higher, you want to see transportations participate in a more productive way. All right, though they've been lagging, all right, you want to see those pick up with relative performance, and as they're beginning to show here. All right, so again, pay close attention to that area, not just next week, but on an ongoing basis. All right. In terms of the sectors that performed well or did not over this past week, again, pretty much all the sectors performed fairly well. The only laggard actually was the financials, and that has to do a lot with interest rates. So with bond markets, this week rallying somewhat, that pushes down yields. That's a drag on the financials. All right, so that's the underperforming group for the week. Again, we know what's been happening with energy, so I'm not going to talk too much about that group in and of itself. But all the other groups performed pretty well on an absolute basis. So as a result, the markets clearly rallied. NASDAQ, of course, being a very strong area as well. So the financials, although we'd like to see financials, participate in the rally, the markets can rally without it, but yeah, you need that financial group to really provide some support in there too. So look for potentially a reversal there in the financials. But if that continues to drag, that may stall out this rally, and traders out there, money managers may take a little pause and saying, hey, what's happened? And again, it is June 4th, so what happened to the sell in May and go away? All right, it looks more like a June balloon than a sell in May. So we'll see what happens. Again, I'm not into the predictive type style here. Many people are themselves. So let's take a quick look upcoming for this week. What's important? What do we have on tap on the economic calendar? We got ISM non-farm manufacturing index on Monday, June 5th. That's probably going to be the big one for the day. And then what else we have? Not too much. We got weekly jobless claims, and of course in the midweek we have the EIA petroleum report. So that's about it on tap. Let's take a look at what else we got. Alright guys, and just lastly, this is just a 60-minute chart that we use as well in our trading room on a weekly basis, day over basis. And in this case, we focus on a 3-day trading cycle, and we have our software automatically plots targets to the upside, to the downside. It also targets the 10-day average true range. All right, so again, these lines here, what we're seeing here, 24, 26.50, 24, 45, 75. These calculate automatically the 10-day average true range. So it's really important to understand where the ranges are, where the average ranges are. Okay, so for the S&P or for any instrument, NASDAQ, crude oil, whatever it may be. So one of the key things that we focus on is how is price acting relative to the average range? Has it met range objectives? Is it exceeding expanding range objectives? Okay, those things are important on a daily basis. If you have not ever been following the average ranges, this is probably a good time to begin and understand what those average ranges are in particular. Okay, to help you along with that, for those that are unfamiliar, we actually have on our website a daily range calculator. Okay, so automatically this particular calculator is free, so you can just come on to the PolarisTradingGroup.com, look under the trading tab here, tab down to PTG Daily Range Calculator. All right, this is a Google spreadsheet, updates every 5 minutes live. Okay, so you can take a look at what the 10-day average true range is. Currently it's about 10.5. That's pretty narrow. All right, for the most part. Average range typically historically has been about anywhere from 16 to 18 handles. 10.5 is very narrow. Now, also just one note about the average range. When the average range is compressing like it is, that typically means that the bulls are in control. All right, so a narrow ATR, average true range, denotes bulls that are in control. But we're at the relatively the low end of the S&P range. Pretty much same thing with the NQ. 37 is still historically in the low end. So come visit on a daily basis. You're welcome to take a look at this. It is free. Again, it is calculated every 5 minutes. So as soon as you start coming in, 8 a.m., boom, all right, you'll get the update. And this is it'll tell you what it shows here is the bullish ATR target for the session, and that's based on the 24-hour high or low currently. And it basically just calculates the overnight low, whatever that may be, the lowest low between the 24-hour or the cash session, added to the 10-day average true range, and it gives us our upside range target. All right, so it's average true range, and works very, very well. It gives you an idea of where price is. We also have a couple other columns here that adjust for 75% of the range, and based upon the opening range itself, right, which is a pretty important metric, it will tell us where the price target is based upon 50% of the measurement from the open range. All right, so come take a look, visit our website on that if you have a chance. And lastly, we'll get into the if any of you have not visited with us as of late and you're viewing this perhaps for the first time, come take a look, see what we do on a daily basis. Visit us at PolarisTradingGroup.com/free-trial. There's your URL there. Come take a free trial with us and see what we do on a daily basis. There's a lot more that we offer our members in our subscribers that that is not covered in this video. And for any additional information or questions you want to contact me, feel free to david@polaris-trading-group.com, or contact Patrick Zielbauer or your Infinity Futures representative at the appropriate contact information levels there. All right, we want to thank you very much for this video, taking the time to watch it for the upcoming week, and we'll see you at the next installment. Thanks very much, guys.